Good afternoon, everyone. What we're going to talk about today for this video is what does change look like? How do we know it's change or retracement? And this is trading with the Nautilus trading system with market research. We're going to show you what change looks like, and usually change looks like it starts on the 5-minute chart. Again, you know that we look at 3 different time frames: 5-minute, 30-minute, and 2-hour. Now, when you see an increasing black bar, the reason it's black is because we have increasing volume against the current trend. And if you've noticed that the current trend was obviously down, very big, although you do see some increasing bars, what it turns out to be is decreasing. It turns out to be retracement, and then the trend takes over. You see an increasing black bar, and then decreasing black bar, and then the trend continues. Okay, so it's not necessarily that we have to buy this one, but it gives us a point of interest, which means from this low here, and this is the low of the day, we're talking July 18th in the crude oil, August crude oil. This increasing black bar tells me that we have increasing volume over the previous bar, and it's increasing volume against the current downtrend. That's why it's black. Okay, so now we have a point of interest or point of risk. We can make decisions against this point as a sign of change. Now, the first confirmation that we have is see this decreasing black, increasing green? That's the first sign that something about to happen is sort of special, because now we have a point 1, point 2, and you can see my channel. Very steep in a straight down market, but this is just giving us a foreshadowing about what's to come. Okay, find that it goes up here and test some movers. But from here to here is about $1. In this case, it's about $900. But let's say we don't buy this. I'm very concerned. We're in a down channel. I see strength. I don't want to be buying strength in a down market. But this increasing black bar is very important because it gives us a risk point. So now if we think that the crude is done, and you can see the volume starting to tail off, and you're starting to, but we like to see tests of this. So a couple ways that you can handle this. We need a test of this to be a good confirmation level. So this is 94.69. Okay, 94.69, and market goes up. Okay, now we're coming back. Now we see sell-off. We see this increasing red sell-off. And we're not sure if we should be long or short because my moving average is going back and forth through this middle Bollinger. So we're sort of not sure. Here we're sure. We definitely have a short bias. But at the time when this was trading, the stochastics were in oversold territory under 20. So we know that this is a good risk point. So you know what? I think this could be the low of the day because of this increasing black volume. And now we come back and we're testing it. So now, oh, here's a new leg down. 94.88 after we just traded 95.58. It's about a 70-cent break in the crude oil. But this is where you take your risk. You're going to risk a big sell-off to here. If you're wrong, okay, and the thing completely falls apart, you're going to lose $200. But if you're right, because of this information, you might catch the start of a new uptrend. Okay? 88s, 68s, that's sort of the risk scenario here. And as we go further on in the day, there's nothing happening. There's nothing going on. I'm long. I think maybe we have an up channel. But now the 88s are important. Why are the 88s important? Because you see this decreasing, increasing volume pattern? Taking this bar high out. It was like, wow, I wonder if we got another continuation pattern up. So now this becomes very important. Okay, so this is the 69s, these are the 88s. We think we have a change pattern with this as our risk point, all because of this increasing black volume. And then you start to see the market selling off again. Nothing's going on, light volume, but we trade down to 02. Didn't take out the 88s yet. Now we're trading back. We're just doing nothing. It's lunchtime. 12 o'clock Chicago time, we're trading down to 03, but we never take out the 88s. And then we get this pattern, which is something that you're looking for if you bought this against these lows. Why? Because this is a continuation pattern. This is a continuation pattern. This decreasing, increasing scenario, if you're not in, this is one of the targets that you would be in. Okay? But we've already decided what change looks like. We think there's change going on in the crude oil. Oh gosh, it takes me an hour to hang with this position and it's not doing anything. But that's okay, because we could re-risk. Your risk is already new lows. As you buy this and you get through this pattern, you could re-risk to the 87s. So now you're almost break even on the trade. Okay, this is a trade that we do all the time. And then as it starts to move, you can see the change pattern starting to work. All because of this black bar and a test of it. Remember, we've been in the big market. This thing was down $2.50 at one point. But this increasing black bar tells us there's a possible change. This confirms that the change is there. Okay? But now we have a risk point, which is very important. Okay, you know what? I think let's make it a $200 chance against this. It's about $200. And you can see, remember the 94.88s. Okay? And all of a sudden now you're starting to see, uh-oh, decreasing green, and now we're in. And you can see obviously where it goes. Now where it goes is very important too. See this 96.07? That's $1.20. That's $1,200 of play here. Never gets you out. In fact, it never really comes close to stopping you out on these 88s. All came from this increasing black bar. If you're wrong, we're going to lose this little bit. If we're right, we're going to catch what we call a right trend line and a possible, see if we can't catch a left trend line and get to our targets. And our target would be, okay, the 30-minute middle Bollinger. Now, if you're just reviewing this for the first time, it's a little different. But the middle Bollingers are very important to me. That's a target for us. If we're in a big down market on 30-minute and my 5 minutes show me that we possibly have change, this would be my target. It would either be here or middle Bollinger. And this obviously is the middle Bollinger. You can see how we've sold off from there. But that's our target. That is what change looks like. All becoming off our volume patterns. We believe volume tells a real story. And this black bar we think could be a +1 or a point of risk. In other words, a 0.1, looking for a 0.2, 0.3 up. So this is a scenario for change. That's how these volume controls and colors coming from the Nautilus trading system can help you profit.